Nobody likes inflation, where prices continue to go up and up and up, and you have the same amount of money. Well, in order to counteract that inflation, interest rates are climbing, which of course is affecting mortgages and the real estate business. But that doesn't mean that homes won't sell. It just means that home sellers and home buyers need to get on the same page and start adjusting prices. Joining me now is the branch manager of Mortgage Right Austin, Becca Christensen. Nice to see you, Becca.
Good to see you as well.
So let's talk interest rates and a new trend that home sellers are offering.
Yeah, so what I am seeing is that sellers are recognizing that the buyers are in need of a little bit of help. They've got a little bit of the push on them with the interest rates. And so the sellers I see that are recognizing that, the newer trend that I'm seeing is offering seller credit, just like they would have potentially in the past, but specifically mentioning, hey, we're offering this to help you buy down the interest rate. And that's more meaningful to the buyer because that then affects their monthly payment and their bottom line and the interest over the life of the loan.
So it's really not any different than, say, offering to pay your closing costs or buy you new carpet or a flooring allowance.
Correct.
You're saying, hey, I'm gonna give you $5,000 or $10,000 to buy the interest rate down on your loan. Now that is a great idea. Okay, more about that.
Yeah, so it's essentially the same thing as far as agents are concerned, and on the contract it goes in the same place as seller credit has always gone, and it can be applied in any of those number of ways, whether it's buying down the interest rate, helping with closing costs, or whatever the other allowances are. So it functions in the same way, but now that we have more of this need to help bring the interest rate down and people are spending money to do that, it's more applicable to use those funds, that seller credit, in that way.
You have an example.
I do. I have a great example recently. So I had a house that was listed at $345,000. And of course, I'm helping the buyers since I'm helping with mortgage. So they went to offer on this house and they were needing some help. And so they originally offered a little bit lower, about $340,000, and asked for $5,000 in seller credit. Well, the seller came back and they had some negotiation time. They met in the middle.
Compromise.
Crazy. And they agreed on a price of $345,000 with $5,000 of seller costs. And that difference in price from $340,000 to $345,000 is next to nothing when that's spread out over the course of 30 years. But it was a way of helping the seller kind of get where they needed to be in a happy place to sell the home and help the buyer with money towards their closing costs and bringing the rate down.
So the $5,000 helped buy their rate down, which magically made them qualify for that.
Exactly.
Wow, Becca, great information.
Awesome.
Thank you so much.
You're welcome.